Alright, good afternoon, everyone. Today is Wednesday, the 21st day of August, 2024. So, we have some really good stuff to talk about today. The diamond principle is one thing. I coined that term, diamond principle, and you'll understand why when I get into it with you. And it's something that's actually price action stuff that you see right in front of you all the time. But before we get into that, let me just say this. When this webinar is done, the recording of it, well, anybody that's in there and anybody that signed up for this will will get an email automatically from GoToWebinar with a link to the recording. The recording can be in YouTube, and you'll get a link to that recording. And you will also get a link to that recording. Yeah, it'll be automatically emailed to you, and I will have it in here. If you go to targetviewtrades.com and you click on TV Trades web recordings, it will be right here. I've already got it all set up except for the one that actually goes here. This was last week's, and this was the week before, and this was the week before. I need to change that. That starting screen is kind of annoying that there's three of the same thing right in a row. Anyway, that's where it'll be. If you go to targetviewtrades.com, it's going to be right here under TV Trades web recordings. Now, also at targetviewtrades.com, if you have not taken a free trial with us and you really want to get that free trial going, as soon as you can, because there's new stuff that's going to be coming up. Although you're going to be seeing it, but it was recommended to me by this company that I hired that I raise the prices, and I really don't want to do that. But anyway, to get the free trial, go here to targetviewtrades.com and scroll down to right here. Alright, this is how you sign up for the trial. It is a free 3-day trial. Alright, free 3-day trial. Sign up for the trial. It's $25 a week after the 3 days. If you want to do it on a weekly basis, just to get your feet wet, get in there and try it out for a very low cost. If you want to save some money and you really want to stick to it, then do the $90 a month, and that'll give you a whole month to try it out for, again, a really low cost. That's like a tank of gas. For some people it's not a tank of gas for me, but for some people it's a tank of gas. And you can also do the annual. If you have one of these and you want to upgrade to the next one, just let me know and we can work that out. It is cheaper every level you go. This is what it is. This is cheap enough. Then this is actually cheaper. It's 10% less. And then this is actually cheaper. That's 20% less than this. It's actually 23 or 4% less than this, I think. Anyway, yeah, that's all that stuff. So that's how you take the free trial. Now, one other thing that you have to do if you do take the trial, you have to have TradingView charts. Okay, you have to have TradingView charts. To get charts, you go here to Getting Charts. Click on that. Again, this is at targetviewtrades.com. Click on Getting Charts. Click right here. It's going to bring you to the TradingView site. When you get to the TradingView site, it's going to default to the annual in here. Look at that alert popping up right there. It's going to default to the annual right here. Click on the monthly. The Essential will get you 2 charts, and it'll get you 20 price alerts, 20 technical alerts, and no ads, and you'll be able to have a few different indicators on there at the same time. All right. The 20 technical alerts is the important part, because if alerts are part of what you want to do this for, then you're going to want to be able to have alerts, because just to set it up on one chart to set up the alerts, I think is 6 alerts to set it up with one thing. If you're just setting it up for the range sniper, well, for the range sniper and the aggressive range sniper. If you're setting it up for the regular trades, then there's a whole bunch more. So you're gonna want to do the Essential at least. All right, I have the premium, but you don't need the premium. The plus is cheap enough. And if you have the basic, you can make things work with the basic, but you're not gonna have the technical alerts. You have to be watching your charts. You have one alert, I think, something like that. You have to be watching your charts. And the basic is free. The one thing that's not free, if you're going to trade futures, data is not free. Okay, so to get the data, if you go here and you go to the setup page right here, in the first 2 minutes of this video, I tell you how to get the data, but I'll just show you how to get it. Okay, right now I'll just hit save on this and I'll show you how to get the data. For futures, alright, if you're going to trade futures, you go up to whatever it is, and this right here, by the way, your login ID, logged in as whatever you logged in as right there, that's what I need. You go here and go to accounts and billing, and right down here do this. That one right there, it's $7 a month. If you're going to trade futures, you have to get real-time data. That is where you get it right there. All right, $7 a month. This is all you need. All right. All right. So now we can get into the stuff. All right. Now we'll go back here, and it should bring me right back to that layout that I had open. And this is called the sniper layout. Now, let me check here. There are 3 things in here. You just got the email. Thanks, Mark. What was that second thing you said? Right now? Where does it say that? Does it say that somewhere? Oh, TV. Okay, you're talking about TradingView. TradingView right now is having a sale, is what he's saying. They're having a 50% off sale. Okay, that's because did I say it was having a sale that I didn't know about? No, TradingView. If you sign up for the TradingView charts, okay. So this is why. Let me go back and jump in there one second. Thank you for letting me know that. The reason I say to do the monthly. Let me go back out here. I don't mean to go here. Sorry. Let me go back here. The reason I say to do the monthly is because every now and then they have a really good sale. And right now they're having a huge sale, is what Mark just said. Why is... Hang on, Casey. Let me see what you said. You're paying for TradingView data. Why is your trading broker also charging you $7? They're 2 separate things. You're getting charged $7 for your DOM and for whatever you trade on, and you're getting charged $7 for TradingView. Right? So whoever you trade through, they're charging you $7. I mean, I pay $43, I think, at my broker. That's exchange fees. You got to pay exchange fees no matter where you do, no matter where you trade. 2 separate things altogether. Okay, that's your broker that's doing that. It's not actually even your broker. It's the exchange. But the $7 that you pay in here that I was just talking about, the $7 is to get free data for your charts. That's a different thing altogether. All right. That was the answer to the question. This, I wanted to just tell you, Mark just said they're having a sale right now. And they're having a 50% off sale. That's why I say to do the monthly, don't do the annually. Because the 50% off sale that they're having right now will be for the annual thing. You get to save like 50% off if you sign up for the annual right now. That's what he's saying. I don't know. It's obviously not showing up right here. But if I were to click on something and switch to, I mean, there's 3 levels above this too that are much more expensive. They have more stuff than I need, executive levels or something like that. But they have bigger sales. That's why I said to do the monthly right now until they have a sale, and they're having a sale right now. So if you go in here and you click on the upgrade, or you click on whatever it is that you have to click on, you can take advantage of the sale. You switch to from a monthly to an annual, is what I was getting at. All right. So back in here now. I'll show you how to load the new sniper. Yes, Wayne. Okay, yeah, the new sniper is easy. I don't even have it on the chart, right? I'll take it off. There. I have nothing on the chart right now. I have no indicators on the chart at all. So for all of you guys that are brand new to TV trades, to TargetView trades, let me go through this really quick. To add TV trades or TargetView trades onto your chart, you just got to click it one time. Bang, like that. It's only going to show you long trades when you click it like that because it was designed for equities. It wasn't designed for the ES7 range. It was designed for things like, let's do NVIDIA. Why does it never do that right? Here it is. It was designed for things like this. All right. I'm not on a 7 range, of course. On 120. This was one of the questions that I think Wayne emailed to me. How to pick a range for something like this. It's got a huge price. When you're dealing with stocks, 1 tick is 1 cent in ranges, right? So if you go to 100 range, then every bar is $1, right? And by default, this is what I originally designed it for. I designed TV trades to work with equities, to work with stocks, all right? And I designed it to make it really simple, so you just have to throw it on the chart like this, and you get an arrow like that says buy, and then it says, your long entry is, well, and this is the last one right here, but back here it would have said your long entry is right here, your stop is down here, your risk reward is whatever the risk reward is, and these are your targets. All right, that's what it was said back here. Now I'm on a range bar, so I can't do bar replay, but if I go to like a 30-minute bar, you can see the same stuff. See, like this one right here said buy right here on the up close. Your stop was 63 cents for $128 stock. You got a 63-cent stop, and your first target was from 128.28. Your first target was $1.75, so it was a 3-to-1 roughly. If I put on the risk reward on this, you'll see, I believe, if I show risk reward. If I put on the risk reward on this, once it loads up and does the math, there it is, 2.73 to 1. So, that's what this last trade was right here. Now this one over here, I don't know exactly what it was, but because it's a minute bar, we can do the bar replay on it. You just come back here and it's going to tell you exactly what it was at that time when it loads up. This was a 4-to-1 risk reward. Okay, so that's what I originally designed it for. Now, a bunch of you guys, the majority of you guys actually, you've known me for years and years, and I trade futures every single day, and a bunch of you guys trade futures with me every day. So you guys wanted to look at it in futures, and then there's a select group of other people who are stock traders who wanted to know, if I miss this one, do I have to wait, all those days to get into the next one, which happened here? And the answer is no, you don't. You can put on the mid-trend trade. Okay, the mid-trend trade will let you get into trades that happen in the middle of the trend. Once it loads up, see, there was one there and one here. Now with the mid-trend trade, the targets that come from the original blue arrow apply to the mid-trend trades. All right, and for those of you guys that have been following the sniper stuff as I've been developing it over the last month or so, and those targets also applied to the snipe stuff, but that's changed now. Okay, that's fine. But that's changed now. So the way that this is, I originally designed it. You can do it for short trades as well, but I originally designed it just for stocks, and it works well for everything, but I designed it for stocks. So you could buy stocks, or you could buy ETFs, you could buy options. If you get something like this, it says it's going to go up. When you see your targets way up here, you can buy options, call options, and just wait for it to hit the target. There's a bunch of different ways you can use it, and that is what TV Trades is. The basic TV Trades was designed for that. If you want to see the shorts, if you want to buy puts, you can turn the shorts on in here, and it'll give you shorting opportunities. There should be something popping up right here, and there, and there. And so you have shorting opportunities as well. Now, this is on a range bar. Actually, no, this is on a 30-minute bar. Sorry, this is on a 30-minute bar. If I go back to the range bar, you're going to have the same thing, but we won't be able to do a bar replay on a range bar. But I just wanted to show you that that is what it was designed for, and that is how simple it is. You just turn it on, and it'll tell you in here. If we do a replay back here to this short, it's going to tell you right here what your risk reward was. It's going to tell you what your targets are. It's going to tell you, what your entry was, what your stop needs to be. So your stop in this one was 2.33. Your risk reward was 4. Again, 4-to-1. Now what the risk reward is, guys, is the difference between the entry point. It's reward over risk. So it's the difference between the entry point and the first target, and the entry point and the stop. It's the difference of those two divided. So the reward divided by the risk differences. That's what it is. Okay? You had on a 7-1 day and you get to sell until it went up. ES for 22 points. What range to use? On the ES, you had on a 7 range, you didn't get a signal? That's unusual. Okay, and on the ES, in the mornings I still use, even now that I've gone to larger time frames in the mornings, I still use the 7 range on the ES, and I'm going to get to that in just a minute, Casey, okay? But one of the things that I was saying about the prices over here, it doesn't apply so much to futures. With futures, it's volatility that determines the range. With stocks, because they're in dollars and cents, it's the dollar amount. Like something that's $100, you could use $1 a bar, but something that's $1,000, you might want to use a $5 bar or a $2.50 bar, which would be, a 250 range is a $2.50 bar. Try to click on that. Did it switch? It didn't switch. Oh, because I'm in bar replay, it won't let me. I have to exit bar replay. Okay, so if I go to a 250 range right now, every bar is $2.50. Okay, so you still get great opportunities. And this is with NVIDIA. This is with the stock. You still get great opportunities, great entry signals over and over and over again. It's just now it's a stock, and this is how you would determine it. Okay, Jenny. So the risk reward is an indicator of higher probability. It's basically just math, is what it is. Okay, it's telling you, it's only based upon the stop in the first target. It's not based upon any target beyond the first target. That's what the risk reward is, right? So it's saying that from your entry point to the first target, divided by from your entry point to the stop. So in this case right here, the entry point was right here. Your entry was there. I mean, it's $3.76 from your entry. From your entry to the stop is $3.76. Okay, and it's just a little bit less from your entry to the to the first target because it's less than 1. So it's just a little bit less. It's probably $3.70 to $3.65 to the first target. But the next target after that is like $12 more. So, you know, if you make it through that first target, you got a long way to go to get to the target after that. I mean, if I put on the target lines on this, it probably hit all of them. All 3 of those anyway. If I turn target lines on. Yeah, you see it all 3 of those targets. That one, and that one. But this was the first target, which it hit. And then the next target was way up here, which it hit. And then the next target was even more than the first target. Between those 2 targets was right there. And I don't, you know, we can put more targets on and see if it hit the 5th one or 4th one. I don't know what the, looking left, I don't know what it was at, but hopefully that answers your question. Yeah, okay, so the next target's way up there at 36, so we don't even see the next target. For higher probability, it's not really a question about probability, Jenny. They're all, I mean, every trade has got a high probability, or it wouldn't, you know, the fact that it triggers means it's a high probability trade. Okay, what it's telling you in here is just giving you information about from the trade entry to the last swing high, or the last pivot point, is what it's telling you. That's what the targets are. It's from the swing entry to the last pivot point is what is giving you that information. And I mean, you can see it in a bunch of different ways. You can see it here in the target table. You can actually turn on the pivot points if you want to. I added that down here. You can draw it right there. You can see the pivot points. But this is going to go through and tell you, okay, it goes from this one, and then the next one up is this one, and then one after that is that one, and one after that is that one. It's going to do the math for you and take care of all that, so you don't have to go through manually. Look backwards until you see the next one. Okay. 318. I'm trying to keep on schedule here. I didn't even start with the whole diamond principle yet. But that's the way that this works. Okay. Futures 7 range is just 7 ticks. That is correct. Futures, the range is the number of ticks it is from the top to the bottom of the bar. Okay, it's a 7 tick range. It's not a 7 tick like a 7 transaction bar. It's a 7 tick range bar. You got to make sure that you got that right. Okay, Casey. They are 2 separate things, completely different things. All right. So I didn't even get into the other stuff. This is just regular TV trades. If you just throw the TV trades on, this is what you get. Okay. Now the question was back here, a little ways back, about, I think, Wayne, did you ask it? Or was it Mark? How to load the new sniper. It was Wayne. Okay, how to load the new sniper. All you have to do, anybody that's already a subscriber or anybody that's on the trial right now, all you have to do is go to the invite only and you already have the sniper in here. Right? I uploaded it for everybody that's got it. So just click on that one time and you have the sniper. Now, this is the sniper. There are 2 settings to the sniper. One is conservative, which last week was really conservative. This week, the conservative has got a few more trades in it. Now, I want to get into the diamond principle before I get into this too much, okay? But all you have to do is just click it that one time like that way. Okay, just click it that one time like that. I don't use the sniper from the beta version anymore. Okay, stop using the sniper from the beta version. Use the actual TV trades range sniper. This is the permanent one. All right, the beta version is going to go away pretty soon. Everything that's in beta that I'm going to keep is going to either go into the TV trades or it's going to go into the sniper. And the sniper's already got everything that I'm going to keep. So the one that's in the beta version, you can stop using that, right? Just go straight to this. Right, and this has got more than that does, which I'm going to show you that in a few minutes, okay? Do the targets change as price action moves forward? Yes, they do, John. They don't change, well, they change, the targets are triggered, well, let's go back here. When you're talking about the TV trades, right, when you're talking about this, the targets are triggered from the blue arrows and the red arrows. Right? Every time you get a new blue arrow or a new red arrow, the targets change. The targets update. Okay? But until then, it doesn't change. You know, if you get a new swing high in here, if this is going and you get it, you know, it moves up and then it moves down, moves up and moves down, it gives you a new pivot in here. It's not going to change what's in the table because the table is looking from this point back. It's not looking from this point forward at all. Okay, to answer your question, I think that's what you're asking. Yes, so that's the way that works for the TV trades. Now, one of the things about the sniper was, you know, when I had the beta version in there, the sniper and the mid-trend trades use the same targets that were delivered from the red and the blue arrows, so you had to have a red arrow on or you had to have a blue arrow on to be able to have the target table on. You don't need that anymore. With this sniper, it now works from the last snipe. Alright? And this is with just the base sniper on. If you put the aggressive sniper on, now the aggressive sniper is going to happen after this one, usually. You're going to have, this one's going to trigger first and then that one. Usually is going to be the case. But there'll be times where the black one just triggers all by itself. The targets are based upon whichever the last one of these is. It's the last one of these arrows. Like, this is the last arrow that points up right here, 2631, right there is the entry. 2631 is the entry. Okay, so you stop on this. The stop is just going to say it's either going to be the bottom of the bar before or the bottom of the bar that you got into. All right, whichever is farthest away. Okay, it's either going to be the bottom of the bar right before or the bottom of the bar that got you into it. Now, the bottom of the bar before may be too much. The bottom of the bar that got you into it may be too little most of the time. I still got to make an adjustment for this, but it's going to be just a little bit more than the bar that got you into the trade is usually where your stop needs to be, because these are usually going to be on the pivot. The black ones are not usually going to be on the pivot. They're going to be right next to the one that's on the pivot, usually. You see, they can be right next to the one that's on the pivot, usually. But the other ones, the regular snipe, the purple ones, and you can make them whatever color you want, but the purple ones are going to be the ones that are usually going to be on the pivot. They're going to usually be the bar before the black one, and they're going to be on the pivot when they happen. And just to show you that it goes back to the last arrow, if I go to a different time frame here, you'll see the last snipe was this black one right here. So it goes here. Now if I shut that off, if I shut off the aggressive snipe, it's going to be this purple arrow right here. This is going to be the last one. And you'll see that the table now goes back to the purple arrow. Okay, so the short entry here is 128.03 right there, 128.03. And the stop is 128.18, which is, you know, top of that bar right there, 128.18. And it gives you all your targets right down below. Okay. So this has improved greatly over the last, you know, I wanted to get it done for you last week, but I really wanted to get some good stuff put in there before I actually released it to you. And I released it all to you guys like at 6 o'clock this morning. I finished it. And I'm still working on it. There's still things. I want to make the stop a little bit better. But I'm still working on things. But now it's a separate thing. So those of you guys that have been following and been doing the beta version for a while, I'm going to get rid of the beta version soon. Alright, what's in the beta version that is going to go into the TV trades is going to go into the TV trades. What's in the beta version that's going to go into this is going to go into this. Like right now, you know, one of the things that's in the beta version that we did was the pivot look back. If it's looking back too far for you and the targets are too big and the stop is too big, you can change the look back to be smaller. That was one of the things that was in the TV trades. Right? That was one of the things that was in the TV trades. You can change that. And there's some things in here that to you they don't mean anything, but to me they do. So, you know, like in here you can turn these on or off and it's not going to make any difference. I think the snipe filter, I don't think that's going to make a difference. The snipe length, that I think might make a difference. I have to go and check. I don't remember. But I try not to put things in here that will give you guys the ability to screw with things too much, because you end up going down a rabbit hole that you really don't need to go down. A lot of people do, and I really don't want you to do that. Does the color matter in the background for the sniper? Well, it does, in that you're not going to have, with the sniper, you're no longer going to have ones going the wrong direction with this snipe. Now, with the aggressive one, you might have ones going in the wrong direction. Alright? It's possible that the aggressive one could be going in the wrong direction. But I know with the purple ones, they're not going to be going in the wrong direction. And I'm pretty sure I set the black ones so that they don't go in the wrong direction too. Now remember, the sniper, the bias level is always on. Alright, it's always going to be on. So if you want to just be going in one direction, make this a bigger number. Alright, if you want to just be going in one direction, you can make that a bigger number, and it's going to get rid of some of the trades, some of the short trades, and just give you mostly long trades, or mostly short trades, depending on what side of that thing you're on. But it's always on. Alright. And that was something else I took out. See, there's so many things in here that were added into that beta version. I mean, you guys are just still using the beta version. This is the beta right here, right? And it just got huge inside here. There's just way too many things in there. And I had a meeting with Jeff, one of the first guy who signed on to TV Trades. I had a meeting with him over the weekend, and he still had the original one on, and the original one only has 4 things. Only has 4 things here. It doesn't have anything else below it. It just has 4 things, and nothing else below it. And I really didn't want it to grow and become this huge thing like this, but it is what it is. When I trade for a living, and so I keep wanting to make things better. I always want to make things better, and so the fact that I write the code to do all this stuff kind of puts me in a little bit of a bind, because I'm always trying to make it better. So when I do things, I want to do it and I want to use it, and so the only way that I can use it and do everything is to do it all right here in front of you and let you guys use it too. So you guys get to benefit from that. And I'm gonna slow down though. I'm gonna stop making changes. Okay. So in here, the aggressive snipe is the black one. The regular snipe is without the black one. The purple ones will usually happen before the black ones. The black ones wait until they got a sure shot, and then they take it. Okay. The purple ones will be on the pivot, usually on the pivot. If it stops out, it's not on the pivot. But that's that stuff. The question was, does the background matter? That was a question. Okay. John, you see the TV Trade Range Sniper in your invite. Yeah, I put it in there. I put it in there this morning. And the hot tips was only in beta version. I'm going to move that over to that's going to be in the hot tips. Yeah, the hot tips will be in there. Wayne, it's going to be in the TV trades, though. It's not going to be in here. It's going to be in the TV trades. Alright, it's not going to be in the sniper. So yeah, that's going to be in there. The pivot, adjustable pivot, is going to be in there. And there was something else that I was going to put in there that is making it through the beta version, but I'm going to get rid of the beta version. Alright, now to you guys, everything that's in the beta version that I'm keeping is just going to be in the TV trades. So if your beta version goes away, just put the TV trades on and you'll have it. If you are using the sniper, use this sniper. Use this one right here. Don't use the one in the beta version anymore. This one's got more stuff and it's better. Alright. So that was all about that. Now, I want to get into the other stuff here for a minute. No, I said this was about the diamond principle. So I want to cover the diamond principle. Let me go through here and see who all is in here and see. All right, the diamond principle. Those of you guys that do stuff with me in the morning, you know what it is. But those of you guys who don't, then you may not know what it is. All right, you probably don't because I made it up. But it's basically just using price action. All right, using price action to determine where price is going to go next. And you have some information every time price moves. It gives you some information. Okay, And you know, we're going off the well-known fact that price always moves. Hang on. Let me get something I can draw on. Okay. That price always moves kind of the same, right? It always goes up and down, up and down, up and down. We're working off of that, right? So every time it does that, it should pull back to here, and every time it goes up, it should go up this amount. So from here, it should go up that amount to there. And from here, it should go up this amount to here, right? And from down here, it should go up this amount to here, right? So in hindsight, you have all the points, right? In hindsight, you have all the points. So why do you only use it in hindsight? You know, this stuff is there for you in real time, all the time. Okay, the whole diamond part of it. What you get, what is given to you in real time, in price, what is given to you is this, right? You have this much, you have this much first, then you have this much, okay, and then you have this much. So the information right here is a time element. The information right here to there, and from right here up to here, is the price element. Okay, this time element is right here, and the price element is right there. You guys all follow that? You all with me on that? Okay, if you're with me on that, then let's just say what price is doing. It's always trying to, if we go by the, I mean, it's just a fact that price is always going like this, or it's going down the other way, or it's going sideways. And if it goes sideways, then this part right here, the time element, gets stretched out, and nothing really matters. But the pieces of information that you're given, this one right here is a price element. This one right here is the beginning of the time element. That's half of the time element. This is the other half of the time element. So those together give you the next time element that goes out this way. Okay, and this right here gives you the price element. Well, it gives you the beginning of the price element. Sort of an assumption of what you can see, expect to see next. This right here gives you the real price element from here, and then double that, it should go up to there to extend it. Alright, so if you take the pieces one at a time, like let's look at, I don't know what direction the market's going in right now. And this, I can't really scroll over on this, so let's just look at the real-time markets right here. Okay, let's go to the end and we'll look at real-time markets. Okay, so right here, the pieces that we have in this right here, right now, we have, I wish I could draw better with this. I gotta figure out how to use the drawing tools with this version to GoToWebinar. I know how to do it with the morning version, but using it with this version is a pain. Let me see if I can find that. There's all raised hands, selected dashboard, metric pin, session info. Down here, maybe? Captions, nope. I don't know, it doesn't really matter. I can work without it. I'm gonna have to figure that out though. But remember, this right here is part of the price element, right? It's half of the price element. And this right here is half of the time element. Okay? That's half of the time element. So, going forward from right here, right, this is half the time element. Now that's, right now, that's what we know about it, right? If this ends up being the pivot and it starts moving down, it should go 1, 2, 3, 4, 5 bars. 1, 2, 3, 4, 5. So we should hit right here. So roughly, this should be where the time element ends, right? It took 1, 2, 3, 4. Well, it's 1, 2, 3, 4, 5 bars up. 1, 2, 3, 4, 5 bars down. So roughly, it should end right here, right here, 5 bars over. If it does do that, then we have this time element that we can work with, okay? And to complete the diamond, what do we need? To complete the diamond, first it's got to exceed this level right here. All right, it's got to exceed that level. Now when it does that, we'll have a couple of things. We'll have the price element from here down to here is your price element. We already have the price element. Okay, we've already got that. Unless this goes up higher, we've already got the price element. If this is your pivot, then that's the price element. So we can just copy that, we'll clone it. Okay, we'll take the clone and stick it down here on the bottom. So that's where price is going to go. And this, if it makes it down here when it should make it down there in 5 bars or so, it doesn't look like it's going to. It's taking its time getting down there. But whenever we get the time element figured out, this is the price element. This is where price is going to go. So we know right now that price is probably going to be down in this area, roughly right there. Okay, you guys see that? Does that make sense to you? That's where it should go down to. And you know, it's taking its sweet time getting down there right now. So because range bars don't have any time element associated with them, you don't know how many minutes it's going to take, or hours, or however long it's going to take. But you have roughly the number of bars that it's going to take, right? This number of bars is what it should take to get down there. It's looking like it's going to take more, and so this will stretch out, and then this will stretch out. But roughly, that's where it's going to go. And why? Well, let me do this again, and do this, and this. Okay. So now I can draw on this again, right? So we're going to finish the diamond there, and then when it does get down here, right, it'll finish the diamond like that. So then you have your price element from here all the way down to here is your price element, but it's based upon from here to here to begin with, and then your time element is from here to here, whatever that ends up being. You extend that down and that over, and it's going to put you right about here. The way it's looking, I don't know for sure, but that's what it's looking like it's going to be. Okay, that is the diamond principle, and that happens again and again and again and again and again. So when you're in a trade, like let's say you're in a trade in here, and and you have your target on, your target happens to be way down here somewhere, and you want to have an idea where it should go to anyway, you know, some intermediate point that it should go to. That's when you would use this information. Okay, that's when you use this kind of information. You know, we have, I mean, with TV trades, you know, we have all the targets right there for you. You know, you don't have to really do any math, but this is if you, well, if you're not using TV trades, if you're in here on the trial right now, then you're learning something that you didn't know before. But TV trades, it gives you all, see all those words, I couldn't get the words out. It gives you all that information ahead of time, right there, the target, and that's based on prior swing highs and lows. It's not based on the price action that's happening right here, right in front of you. It's based on what's already happened. This is based on what's happening right now. Okay, so I mean, you can get a pretty good idea of what's going to happen. And if you go back and look at a couple of these, you know, I don't know, we'll look at this one right here. Okay, now this is just a random thing where I want to look at, here, look at this one right here where it started to go up. Okay, so this right here is part of the timeline, right? And this right here is your price line. Getting it up here to right there, the swing high is your price line, right? So this part of the timeline, moving over from here to here, is how long you expect it'll take to go from here up to this level when it goes back up. So if we clone this and you stick it right there on the end, that one happened faster, it got up there faster, and that's okay. But now this is your price level, so if we clone that, then that's where you expect it to go, and you expect it to get there, you know, in this amount of time. This amount of time is where you expect it to get there. Okay, so it made it just about up there faster than you would have expected it to. It pulled back in here, and then it took another leg up to get there. But that's what you would expect. Okay, so the way it all worked out is up here to here is your diamond, and it actually happened faster than you would think, than you would have thought, to get up to the swing high. and then it pulled back. It gave you another one right here that you could draw in right there, and you would anticipate this space here on the side to get it over to here, but it was a turning point, so you didn't end up with that. So you end up going down. Now let's look at this right here. Okay, we'll do it on the downside. You have this space. Man, I wish I could draw with something. I gotta figure out how to. Hang on, let me put those up. No, that's not what I want to do. Put the questions back down. How if I do that? There's a thing here that has. I know there's a way to use drawing tools, and I don't know how. And you guys know how to do that? I do have to figure out how to do that. Is it in settings? No, it's not in settings. I will figure this out at some point. Oh well. Back up here. Okay. So, like right in here, went from here to there, then down to here. So this is the time element. That's how long it should take to do it over again from right here. Alright? That's how long. Well, pull it over here. Here to here is your time element. That's how long it should take to get down this far. Alright, so basically you're just going like this. From here down to here. And then from here over to here. And then you should be able to take that and go like that, and take that and go like that. And that's what price should be doing over and over again. Okay, and it usually does. So if you're in a trade and you know the swing low is the first place you want it to go to is the swing low. Now, usually that's going to be enough to get the goal for the day. For those of you guys that do what I do, usually that's going to be enough to get your goal for the day. But if you want more than that, then you have everything that it's given you right here, telling you how much more you should get out of this and how long it should take to get that much more. All right, like right here, it's saying this is how much you got out of it, and to continue the trend, to do the same thing over again, you should get that much. Okay, that's what you should do. That's what it should do. And if you look at this whole leg right here, from here down to here, that should be roughly the equivalent of from here down to the extended leg right there. That's what you should be getting out of each trade. Okay? Does that make sense? The reason that it should be like that is because what you're doing here is the whole leg down. This part right here, where it's doing this, is just half of the leg length. It's only half of your leg length. The next extension down is the full leg length. Right? When the market's going down like this, when it's going down like this, that's your whole leg length. This pullback to right there is only half of your leg length. Down to there is the other half of your leg length. So the time it takes to do this half of the leg length is the time it should take to do that half of the leg length. Does that make sense? For any chart at all, not just range chart, Wayne. Okay, if you're in a trend, then that should happen again and again. So you should be able to get an idea of where price should go ahead of time. And and you can hold on to trades a little bit longer to get the most out of the trade. Like right here, if you were, like let's say you're in a trade and you were scaling out. You had a whole bunch of contracts you were scaling out. Right down here is where you expect every trade to go to continue the trend, right? You expect every time it goes to here and it pulls back, you expect it to exceed the prior swing low to continue the trend, right? And so you could take something off right here, make sure you're not going to lose any money, take some profit right there. But where should it go after that? It should continue the leg length. It should complete that leg length. Alright? And that's going to be the rest of the diamond. Alright? It's going to be the rest of the diamond getting all the way down there. And then it should pull back and start the whole thing over again. You're going to get your trigger to get in up here. Your trigger to get in up here. That's what the TV trades are for, to give you the trigger to get in up there at that point. And then you push down to here to exceed that. To get to that, and then exceed that to complete the leg and to continue the trend is just that much more. Right? Now, eventually, this is going to stop. Eventually, when the trend ends, it's going to go like this, and it's going to go like that. And then the pullback is going to get bigger. That's your indication in the beginning, before you get that far, when the pullback gets bigger, when you're going down like this and the pullback gets bigger, that's your first indication not to expect the whole thing. You know, maybe expect to get down to here, but don't expect anything after it gets down to there. Does that make sense? Patterns and probabilities. Is this book based on the principle of markets? No, I made all this up, John. I've never read that book. This is all in my head. This is just me. It wouldn't surprise me if it's written somewhere, though. If somebody else had this thought and put it down on paper before I actually said it out loud. But that's what you should expect out of every trade, right? Let's clip a new one out here. Now, this wasn't, man, I just want to do this. Let's go to the end right now and see what it's doing right on the end. Okay, so it hasn't, if it does not continue the trend, if it does this right here and it does not continue the trend, then nothing else matters after that. Right? If it does not continue the trend, then it changes and starts doing it the other way. So then you have to start looking the other way. So this right here, getting down to here, is key. If it does not get down to there and exceed that, then nothing else down here matters. Obviously, nothing matters below that because you're changing directions. But you can see what I was just saying a minute ago. The pullback right here was this big, and then the pullback right here was this big. So this is a much deeper pullback. So that's usually signaling that you're at the end of the trend, and it's probably going to go the other way. So right now, let's use the same information right here, just flip it around. Okay, same information, just flip it around here. There's that piece. There's the halfway mark is right there. Right? So if I double that and bring it over here, that should put it right about there, where you'd expect it to get through it. And the leg length up, the price part, is right there. Right? So then that's where you would expect it to get to it. Oops, I'm sorry. Let me put this down just a little bit and grab this. So this is where you would expect it to get to it up here. And then the next level up, to continue this next level up, you would expect this to go up to here, and this would go over here. So it'd be more like this in the future, right? You'd be looking at this over here. If it's really going to change directions right here, then that's kind of what you're looking at. It depends how quick it gets up here, right? And this was I kind of won that. Depends how quick it gets up here. That determines this next leg. But the price part is already set. The price part is set, and this right here is not yet. But you see how it all comes together, and it does it over and over and over again. If we don't make a higher swing here, we didn't make a lower swing here, then we're just in a bunch of chop. Right? And we're not getting any trade indications in here. We had this right here was our trade indication. We don't have any other trade indications in here. And this is it was random that I chose a 15 range for this. For NVIDIA, I probably wouldn't choose a 15 range. One of the questions earlier was about the ES. Let's go look at the ES, and let's get the ES on a 7 range. That was one of the things that was mentioned earlier. This is the ES on a 7 range using just the basic range sniper. Okay, 7 range using a 10 tick stop on this, or the stop 10 ticks is good. It doesn't even have to be a full 10. It could be probably 9. I wouldn't use much less than 9. A couple ticks more than the bar size. But this is a 7 range, and every one of these on a 7 range, like right here, it gave you you guys aren't used to this part of it. This part of it right here, 1524. So right here, it said the next bar, the down close of the next bar is going to be a short. Yes, 7 range short, next down close. And here it was, the next down close. Okay, or I think it went the other way. It went this way. Something like that. But it gave you, on this bar right here, it's telling you the next bar is going to be a trigger, and there's your trigger. And on this bar right here, it would be telling you the next bar is going to be the trigger, and there's your trigger. And on this bar, it's saying the next bar is going to be the trigger, and there's the trigger. On this bar, next bar is going to be the trigger, and there's the trigger. On this bar, next bar is the trigger, and there's the trigger. That's the way that the alerts are set up right now. Right? No, I don't. Oh, that's why it's different. because I wasn't actually looking at. I was looking at the actual alerts. I was looking at the time that I created the alerts. So right here, this is showing this. This is the aggressive sniper. Okay, so we're not looking at the aggressive sniper. We're looking at the regular sniper, I think. I'm not sure I had them set up right today because I made some changes right before I started the meeting. But it's saying ES7 range aggressive snipe long 1539. That means that's the actual trigger. The next up close right here was 1538.24. So 1538.24. We haven't gotten to that yet, have we? No, this isn't. This does not seem to be. Oh, it's on a 15 range. That's why it's not right. Duh. All right, here we go. Thank you. Thank you. All right. So in here, it. Am I not showing everything here? I don't have the aggressive sniper on. That's why I was showing that aggressive snipe in there. Okay. So here's the 1548 one. Now, the aggressive snipe is not going to give you. It's not going to give you the alert ahead of time. Okay, the aggressive snipe is not. The regular snipe is going to give it to you ahead of time, but the aggressive snipe is not. It's just going to give it to you when you actually get the alert. The aggressive snipe is the one with the black arrow. Usually happens after. Okay, this one right here, like over here, 1510, we should have had something that said there's a short coming up. Yeah, right down here. 15. This one right here. 1509.36. Right here said there was a short, and then right here it wasn't 1510. The bar, the timing is the bar after it's actually triggered is where the timing comes from. It's the start of the bar after. So this was the actual trigger. This was the one that said it was going to happen. This is the one that did happen, and that's how it comes in over here. Okay. You are welcome, Wayne. But yeah, so it's set up now so that it's going to let you know ahead of time before every one of these snipes. Before every one of these snipers can let you know ahead of time that you have a trade come up. And usually it's going to be the bar right before. You know, there will be times where it'll say the next up close, and then it'll go 2 bars, it'll go 2 up closes before it actually gives it to you. Sometimes it'll happen that way, not usually though. You know, when it has a open and close at the bottom of the bar like this, that can sometimes mess things up, but usually it's going to be right on time. Okay. It's going to be the bar before, usually. That's all the good stuff about the snipe. Now, the diamond principle, did you guys all understand that? Do you guys want me to go over that anymore? So, with the sniper we actually enter on the next bar, no, the aggressive sniper is different, right? If I shut this off and I just put the aggressive sniper on, you'll see when it does it. The aggressive sniper does not give you a warning bar ahead of time. Okay, I wanted to give you the warning bar ahead of time, but then I created the other thing that sometimes we give you a warning bar ahead of time. It'd actually be a better trade a bar ahead of time. And so what I decided to do was alright. Let me think about how to explain this conceptually. When you're looking at price, right? And when you look at it just like this, you want to say, alright, well, wouldn't it be great if I could just short on this one right here, or short on this one right here, or short on this one right here, or buy this one, or buy this one, or buy this one, and short this one, and buy that one, or short that one. Wouldn't it be great if I could do that, right? That's what we all want, and believe me, I want it with you. And this is really, really darn close. But how do you know when you're there? And further, if I could tell you the bar before that you're going to be there, why would you waste that whole bar? If you know the whole bar before, why would you waste that whole bar? That's the kind of dilemma that I got into mentally with the sniper and the aggressive sniper. Okay, because this one, the sniper, almost always happens the bar. Well, I'm not going to say it almost always happens, but before the aggressive sniper is not the pivot bar most of the time. It's usually the bar after the pivot bar. All right, it waits for the pivot to happen before it'll give you the signal. That's what the aggressive sniper does most of the time. But I said, well, okay, well, if I know what the pivot bar is, when I was looking for something to give you a lead up to the pivot bar, to let you know that the pivot bar, I mean, not the lead up, the aggressive sniper, to give you a lead up to the aggressive sniper, to let you know that the aggressive sniper was going to happen next. I said, well, if I already have that information, then why do I just give that information? And then I said, okay, so if I have that information, how do I get something that's a bar before that to let you know that that's going to happen? And that's kind of the dilemma that I got myself into. And I worked it out. Not so much for the aggressive sniper, but for the regular sniper. I can pretty much tell you the bar before when you're going to get a signal. Most of the time, tell you the bar before when you're going to get a signal, and that bar is usually going to be the pivot bar. So like right now, wouldn't it be great if we had a signal right here, right there, and then had a signal right here. And if you missed that first one, maybe you had a signal right there. And if you missed that one, maybe you had a signal right there. And if you missed that one, maybe you had a signal over here. Or maybe somewhere in the middle there. Right down here maybe. Wouldn't it be great if you had those signals? And then, because you had this gap down right here, wouldn't it be great if you knew ahead of time that that was going to be the signal? So you'd have your order waiting right there, so you'd be in that gap down. And if you knew ahead of time here, so you'd have your order waiting, so you'd be in that gap down, or you'd be in that trade as soon as it closed. That's what I'm trying to. That's what I did create. That's what I'm trying to create, and that's what I did create. So when you turn this on, and you come in here and you just flip it on, this is the aggressive sniper. But if you put the regular sniper on there, then you see you get the indication. Well, you didn't get that one. We got that one. Did we get one there? We didn't get that one. We got this one and that one. We didn't get those two. But we got that one and what's going on right now. And so these targets right here are based upon this last one right now. But that's the whole idea, is to give you an indication, a bar ahead of time, that the next bar is going to be the trigger. Okay, and every one of these did that. This one would give you an indication ahead of time, this one would have, this one would have, and this one would have, and this one right here. Right here it said 15:57:18, next up close. That is this bar right here. It said the next up close, go along. So you knew ahead of time. Now this bar has to close, so the timing of the bar, like right here, this 15:57:35 is the actual open of this bar. So when you look down here at the bottom, it's the open of this bar. Is 15:57. Then it took a second for it to get over there. But so the open of this bar is what prints here. The time down here is the open of this bar. So when this bar closes, it tells you the open of this bar. Get ready, because it's going to be a trade. And then when that bar closes, it tells you that is a trade. Okay. So for the conservative sniper, get in on the bar after you get the notice. Do you enter the bar after the signal like TV trades? Yeah, Mark, it tells you exactly. You can put the order on ahead of time in here. If it says the next up close, it's not always going to happen on the next up close, but usually it's going to happen on the next up close. If it says the next up close, then you know ahead of time. You can put your buy stop limit order at the top of the bar. And that was one of the questions that you had asked me. I think it was Mark, or maybe Wayne. One of you guys had asked me this. Let me see, do I have NinjaTrader open? I do have NinjaTrader open. Okay, let me see. Alright, I'm gonna do this. Alright, in NinjaTrader we have this thing. Like if you're using a 7 range bar, we have this thing where you can right click and go to strategies, and in here hit the button panel, click add on that. And when you add it, you gotta have an ATM that's already in place for your stop. We'll say a 10 tick stop. The offset in ticks has to be one more than the range bar that you're using. So we set it to an 8. And you gotta go down here and hit this. You guys don't have this, but I can arrange for it. What this does, Mark, it was you that was asking about where to put the orders, right? Or was it you, Wayne, that was asking about where to put the orders? It was one of you guys that was asking about where to put the orders. It was Wayne. Okay, the notice. What this does, if you hit buy on this and you're waiting for the bar to close up and you want to buy when the bar closes up, you just hit buy and it's gonna keep track of where that order needs to be for NinjaTrader. I only have this for NinjaTrader. It's gonna keep track of where that order needs to be, so it'll move the order around on your DOM based on where the top and bottom of the bar is. That is a feature that I only have for NinjaTrader. I don't have it for anything else, and I don't use NinjaTrader, but I still have it. But the way you know, like right now, if I knew on a down close right here, you know, if I got a thing like right here, we have a thing right here that says next down close. Is this right now 1601? 1601. Yeah, this is right now. So it's saying the next down close short. So I know where the top of the bar is right here. Right now, I don't think that one did. Right now it just changed color, so that's not going to be a thing. But if I knew I was going to short on a down close, I know where the top of the bar is. So I would sell to 7 tick range. I would sell 8 ticks below the top of the bar, because I only want to sell if it gives me a down close, and I know exactly where it's going to close ahead of time. So you know ahead of time where to put the order. Okay? So from right here, it would be 8 ticks below the top of the bar. This is an ES, so 8 ticks is 2 points. So I'd be selling 42.50 right now. All right, 8 ticks below. If that were an actual trade, it's not. But if that were an actual trade, no, I think it's not going to trigger because it's on the blue. All right, if it weren't on the blue, then it would have triggered a trade right there. But that's how I figure. It wasn't you, Mark. That's right. It wasn't you. But that's how I figure it ahead of time. That's why I use a 7 range, or I use a 15 range, or I use a 19 range, or I use a 31 range, or a 35 range. Some multiple of 4 minus 1 with the ES, right? Because ES works in points. So it's 2 points from the top with a 7 range. It'd be 3 points from the top with an 11 range. It'd be 4 points from the top with a 15 range, and so on. 5 points from the top with a 19 range. That's why I do it that way. Okay. For those of you guys that trade stocks, I just want to go back here one more time and we'll go to Apple. Okay, I have no idea what Apple looks like today. This is looking pretty good. Now this is with a 7 range. You don't want to do a 7 range on Apple because it's $200 stock. But if you want each bar to count for $1, do a 100 range on Apple. Okay, hang on. Let me crunch it up. Do a 100 range on Apple, and each bar is $1. So Apple's not moving around a lot, it seems, lately. But every bar is $1. So this morning, was that today? Today's the 21st. Yeah, so you only had like $1 range, $2 range today. So if you don't have any range like this on a $200 stock, go down to a 50-cent bar. Okay, so now every bar is 50 cents. And now you have more trade opportunities, not many. It really didn't move around much here lately. I don't know what's going on with Apple. Let's go to Tesla. I haven't seen Tesla in a really long time. My son used to trade this a lot. Yeah, and so on a 50-cent bar with Tesla, this is a $200 one, so you probably want to go to a larger bar. It's got enough volatility, so you'd want to go to a little bit larger bar. So these are $1 bars on Tesla. And you get the same indication. And in here, you'd get notified a bar ahead of time to get ready. Alright? And so if you want to place a trade, if you want to go long on Tesla, if you're thinking Tesla's going to go up long term, then look at it on a larger time frame. This is a $2.50 bar. If you think Tesla's going to go up long term and you want to get a pretty good indication of where to buy, then put the thing on and wait until it tells you to buy. Okay. Alright guys, I've gone over a little bit. It's 4:04. I don't really like to go over. I went over the diamond principle. Now we went over that kind of quick, but can you guys see how it would work? Like, you see from here to here to here, you expect it to get up to here. From here to here, you expect it to get up to here, and then from there, projecting that over. From right here to here, projecting it over, the amount of time that it looks like it's going to take to get back up to here, you would project it would be up here. 234.72, all the way over here, whatever time that is, based on this range bar. Right? Now this stuff also works the same way. The question that was asked a few minutes ago was, does it only work on range bars? No, it works on everything. the diamond principle works on everything. Okay, it's just, it's not as easy and as precise because all these bars are different sizes. With range bars, I love range bars because there's so much precision. You know, and I'm kind of a math geek, and that is just good stuff when you can be so precise about everything that you do. Alright. Go through a trade quickly. What time is it? It's 4:05. This is Tesla. Let's go to the NQ. The NQ is probably bouncing around pretty good right now. Go to the NQU, and we'll do that on, not on 250, we'll do that on, we'll go to the 15 range. And see if we have any trades setting up. We don't have anything setting up right now in the 15 range on the NQ. Let's try the YM on a 7 range. Go to that on a 7 range and see what we have here. Okay, so I don't have any alerts on for this, so it's not going to tell me over here. If I do put the alert on, if I go here and I say we're on a YM, we'll do this one, and we'll do sniper long, once per bar. I'll just throw that on and we'll put another one on. Alright, and we'll see. It probably already gave us an alert there, but TV range sniper, and we'll do sniper long, once per bar close. And they agree. Okay, so they should be right here and active, both of them. So if we get an up close on this bar, I think it's going to be, I don't know for sure, but it would probably be a trigger. This is saying it's 16:03 on the ES. Let me go to the ES since we have the ES already in there. Go to the ES. It says the next bar up close. So we're looking for the next up close here on the ES. Alright, and we got a down close. This was at 16:03. So we're still looking for the next up close. So we've got a down close right here. So we're looking at, let me bring up my DOM here. Okay, here's my ES DOM. Here it is, and my ES DOM from this morning. And we got a low here of 40, so I'd be buying 42 right now. All right, I just have a buy stop limit. 8 ticks above the bottom of the bar. That's what you do. Alright, so now it's 39.75, so we buy a 41.75, 8 ticks above the bottom of the bar. That's how you do it. Okay, Wayne? I know what the bottom of the bar is. I know on an up close, it's telling me on an up close, it's going to be a long trade. So I know what the bottom of the bar is. I'm just waiting for the up close. The up close is going to happen right here. 7 ticks above the bottom of the bar. Right, it's going to happen. It's going to close at 7 ticks above, so I got my buy stop limit 1 tick above that. That's how you do the trade. Okay. If it happens, it happens. If it doesn't happen, well, no, we'll see what. We'll see. I don't know. I don't want to run this meeting out too long, but that's exactly how I would do the trade. It's just like I do in the morning, over and over and over again. Okay. Now, the meeting, I don't know how long it's going to take this time of the day, how long it's going to take for that to happen. But the low of the bar right here is 39.75. And, you know, if you don't know what the low of the bar is, you can just click on this, click on data window, this thing right here in data window, and it's right here. You can also have it showing up here on the top if you want to. Do that, you go here and you go to settings, and status line. In here you can put chart values, I think, right there, yeah. You have chart values showing, okay. There's a couple of different ways you can have it showing up there if you want to. Now, I want to have the alert showing here. I mean, I don't really have to have the alert shown because I know what it said already. It's saying the next up close. So, we can wait for this to trigger or not. If you're just using the purple one, just the regular sniper, then it's going to tell you the next bar, but it doesn't necessarily, it's not always going to be the very next bar. Alright, you see this one, the first trigger came, 16:03 was the first one that said the next bar. Now you see it's gone down, so we're not going to have a long trade, so you can cancel this order. Never happened. You can cancel that order. And now if it pulls back, it's going to start giving you some short trades. That's what will be coming up next, right? Because you just switched to red background. So the next thing that it's going to do is going to be a short trade. It's not going to be a long trade right here. So anything that came from this is no longer useful information. All right. this was the next up close, but that's not going to give you a long trade. It's on a red background. It's not going to give you the long trade. Okay. Yeah, you'll see if it doesn't give you the signal, then it's not valid, right? If it moves on to another signal in here, like you'll see some that will have next long, and then it'll right here. It just did it right here. Sniper next down short, next down close. So right now we're looking at 2 points down from the top of this. All right, 38.75 down to 36.75. So now we're selling. We're not buying now. Okay, just following the rules right here. 38.75. Now it's 39 down to 37, and as this keeps going up, that number is going to keep going up. 39.75 down to 37.75. And okay, so we're still looking for the next down close here. 40 down to 38 right now. 2 points below the top of the bar is what you're looking at. Okay, 2 points below the top of the bar. And we'll see if it triggers here. Okay, it said next bar. It actually didn't say next bar. It said next up close or next down close. Okay, it didn't say next bar. It said next up close or down close. And this is just starting to get really choppy here. I think it's going to close up, and then it's going to disqualify any short trades too. All right, I know it's not going to trigger down here. From the top of this bar, it'll be 41.50 down to 39.50 is what you're looking at now, right there. Okay. You see how that works? When you're trading futures, which is what I do every day, you guys know. That's how simple it is. All right. I'm just watching in here to see everybody that's in here right now. Everybody that's left in here right now. You're all subscribers. You all have this range sniper in your invite only section. Okay, every one of you guys does. I set it up for you this morning at like 6 a.m. So you can go and put that on right now if you want to. You don't have to change anything. Just put it on. Get rid of anything else that you have on if you want to. And just put the range sniper on. And it'll look just like this. If you put it on your ES7 range right now, yours should look exactly like this. Okay, everything should look the same. And so we'd be looking for the down close right here. I don't know if we're going to get it, but that's what we'd be looking for. Alright, guys, I ran this over by 13 minutes. I'm going to end the meeting now. Let me start over here and end it on this part. If you have not taken a free trial, go here to targetviewtrades.com, and scroll down to right here. Sorry, right here. Try to scroll the rest of the way down. Here it is. Did you notice we didn't run into that problem we ran into last week with the meeting choked up? I figured out how to change the encoding value. But go down here to take the free trial. It's only $25 per week. After the 3-day free trial, it's $25 per week, the cheapest way. The next is monthly at $90 a month. The next is $9.97 a year. This is 10% cheaper than that. This is 20% cheaper than that. So however you want to do it, do it. If you have one of these and you want to upgrade to the next one, that's fine. Just let me know. There. Okay, so with that, I'm going to stop the recording right now.